Welcome to Richie Shot.
This week, we have seen a rate cut from Fed and watched its effect on the markets, especially DICs and gold and metals. Let's see the details together. If you're ready, let's dive in. Fed delivers a cheerful September rate cut. The Federal Reserve gave markets exactly what they were hoping for in its September meeting, a 25 basis point rate cut, bringing the policy range down to 4.00 to 4.25%. That aligned perfectly with Bloomberg's median survey forecast, a sign that the Fed and the markets are dancing in sync for now. The decision wasn't unanimous, but it was close. 11 members voted for the quarter-point move, while Stephen Moran, one of Trump's new appointees to the Fed's board, pushed for a bolder 50 basis point cut. His dissent highlights the ongoing debate over just how much stimulus is needed in the current climate. Beyond the headline cut, the Fed also unveiled new projections that brighten the outlook. Policymakers trimmed their expectations for year-end 2025 rates from 3.9% to 3.6%, signaling a softer path ahead. They see rates slipping further in 2026 and 2027, suggesting the era of restrictive policy is gradually fading into the background. On the growth side, the news was upbeat. The 2025 GDP forecast nudged up from 1.4% to 1.6%, while 2026 and 2027 projections also improved. Inflation remains described as somewhat elevated, but the Fed acknowledged that downside risks to employment have grown, hinting at why the policy tilt is now friendlier to growth. Markets will also note the forward guidance. Officials expect to cut another half point this year, effectively laying out a roadmap of easing. That's a striking shift after keeping rates steady since December, as the Fed waited to assess the impact of President Trump's aggressive policies. Put simply, the September meeting marked a pivot. Cautious, yes, but with a clear lean towards supporting the economy. Growth projections are rising, rate forecasts are falling, and the Fed is smiling a little more as it steers into 2026. Markets keep their cool after Fed cut. The Fed's quarter-point cut was no surprise, and markets treated it that way. After an early pop, the S&P 500 slipped just 0.1%, while Treasury yields climbed, with the 5-year briefly topping 3.65%. A textbook buy the rumor, sell the fact moment. The dollar stole the show, with the Bloomberg Dollar Index logging its 7th straight Fed day gain, the longest streak since 2001. By Thursday morning, though, momentum eased, giving the yen space to recover part of its losses. Globally, sentiment looked brighter. Futures in both the US and Europe pointed higher, while treasuries clawed back some ground. In Asia, Japan's Nikkei 225 rose 1%, leading regional markets. Investors there are watching the Bank of Japan's 2-day meeting, though most expect no change this time, with rate hikes pushed later into the year. Gold had its moment too, hitting record highs right after the Fed move before slipping as traders locked in profits. All told, the reaction was calm, even cautious. Stocks stayed steady, bonds and currencies saw brief swings, and global markets leaned positive. The Fed delivered exactly what was priced in, leaving traders waiting for the next central bank surprise. NVIDIA and Intel spark $5 billion. Tech boom. The chip world just got a major jolt of optimism. NVIDIA and Intel have joined forces in a dazzling $5 billion partnership that promises to supercharge both data centers and personal computing. NVIDIA CEO Jensen Huang called the deal incredible, highlighting a friendship with Intel CEO Lip-Bu Tan that stretches back 3 decades. That trust is now translating into a powerful alliance. Intel's tried-and-true CPUs will be fused with NVIDIA's GPUs and networking muscle to create next-generation AI systems, faster, smarter, and built for the future. But it's not just the cloud that benefits. Intel will also launch PC and notebook processors with NVIDIA graphics already integrated, a move that could reset expectations for performance on everyday machines. Think AI horsepower not only in vast data centers, but in your laptop too. The collaboration has been months in the making, with the final signatures inked just last weekend. For investors, innovators, and consumers alike, this is more than a headline. It's a green light for growth across the AI and semiconductor universe. The message from Silicon Valley is clear. When industry giants combine their strengths, the result is not just progress, it's momentum. And markets love momentum. XRP Trader's Eye $4 breakout. Crypto traders are laser-focused on potential ETF approvals for XRP, Solana, and other altcoins, with mid-October shaping up as the key decision window. On prediction platform Myriad, XRP is stealing the spotlight. The token has never traded above $3.65, yet predictors now give a 60% chance that it will hit $4 before slipping to $2. That's a sharp turnaround from just a month ago, when bearish odds dominated at 62%. The shift comes as XRP has gained a modest 3.6% over the past month, currently trading near $3.12. A move to $4 would deliver a 28% gain for holders, and potentially 40% for those betting on Myriad. Momentum is clearly turning bullish, and with ETF decisions looming, traders see a breakout on the horizon. If approvals arrive, XRP could finally push past its ceiling, and $4 may just be the beginning. Gold shines. Metals edge higher. Gold extended its winning streak on Friday, heading for a fifth straight weekly gain as the Federal Reserve's rate cut continued to lift demand for safe haven assets. Spot gold rose 0.2% in Asian trading to $3,650 an ounce, after touching a record $3,707 earlier in the week. December U.S. futures climbed in tandem to $3,684. The rally wasn't limited to gold. Silver futures jumped 0.7% to $42.41, reflecting renewed investor appetite for precious metals. Platinum held steady at $1,396 an ounce, showing resilience despite broader market shifts. Industrial metals also joined the move. Copper, often seen as a bellwether for economic health, edged higher, with London contracts up 0.3% to just shy of $10,000 a ton, while U.S. futures rose 0.2% to $4.61 a pound. Bottom line? From safe haven gold to growth-linked copper, the metals complex is glowing, a sign of confidence across both defensive and cyclical plays.